top 10% of Americans are 40 or 50% of consumption. The bottom 50% of working Americans have gotten killed. We are trying to address that. We're trying to get rates down. Could we be seeing this economy that we inherited starting to roll a bit? Sure. The market and the economy have just become hooked. We've become addicted to this government spending, and there's going to be a detox period.
Let's take what Scott Bessent said, that the bottom 50% have been crushed by inflation. So what I did was I created price bands for Greater Nashville. We've seen demand drop precipitously. And the reason why is because that people cannot afford these prices. Now, when we look between 23 and 24 at the higher price bands, both the 1.5 to 3 times and the 3 times greater than median, okay, this is literally like 20% of the transactions. And what do you see? You see that demand actually increased from 23 to 24 and increased pretty strongly, over 10%, double digits. Even though active listings grew in those higher price bands, so did contract volume. Contract volume and demand has been growing in the higher price bands, even as inventory's been growing. Whereas what makes such a stark difference is we have this massive growth in the lower price bands. Active listings are up, even as we have fewer buyers. Now, when we look at price cuts by price band, you can see the most price cuts are coming from the lower price bands. In fact, the fewest price cuts are coming from the highest price bands. The pain is being felt, like Scott Bessent said, in the lower, I would say the lower 80% of transactions. That's where the most pain is. And if you are trying to buy, 750 on up, there's less pain, there's less distress. Not saying there's not any. The 1.5 million and above market, it is booming there. And we've already hit a new 31-day contract volume high from where we were in 2023. Now, it hasn't breached what happened last year, but the fact that we had this bump up tells you that the 1.5 million market in Nashville is alive and well and very strong, at least for now. Now, it's hard to think that that will continue if stocks start dropping. And I posted on Twitter, I said, look, contract volume's down 5%. And it started on February 19th, the same day that the stock market actually hit a peak. It is running 5% below where it was last year. And rates have been year over year lower for the past week or so. Now they're about flat to where they were last year. And yet we're still seeing this demand. Now, I expect, my personal hypothesis is that this is going to bump up closer to where it was last year. We're down 5%. I think it's going to bump up an extra 100 contracts in the next week or two. If it does not, though, again, that's a very, very soft sign. We're going to keep an eye on that. Now, that's what makes what I'm about to show you next really bizarre. Now, I've told you Rutherford, where Murfreesboro is, MTSU is, Rutherford's really, really bad, up 42% in active listings. But look at Williamson. Williamson's starting to take off too. Now, Williamson has been just one of the strongest markets where Franklin, Brentwood, Nolensville, Thompson Station, it's a very, very strong housing market, but we're starting to see active listings really skyrocket in Williamson. And Davidson, which has been just a disaster over the past 2 years for active listings, is starting to slow in its growth. Makes you wonder, is there some kind of reverse? I talked about RTO. Is that it? I don't know, but I do have a buyer that's been looking at Brentwood, and you can see in Brentwood active listings basically flat. Where the real growth is in Franklin. Franklin's had massive listing growth, and then the other place where we're seeing a lot of listing growth is in the Spring Hill Thompson Station area. We're seeing a ton between Franklin and Spring Hill Thompson Station. That's where the listing growth is in Williamson County. Now, what's interesting about that? Contrast that with contract volume. Okay, contracts are up in Franklin, but they're basically flat in Spring Hill and Thompson Station when you combine those together. The reason that's important is because massive listing growth with flat contracts. I think Spring Hill Thompson Station may be in for a correction. The other one that's really interesting to me is Brentwood. Brentwood contract volume has dropped 70 last year at this time, now only 44. So even though active listings are flat, contract volumes dropped a big time. That tells me that there may be in one of the hottest markets since I've been looking at this. Brentwood is the hottest, best location, most expensive. Looks to me like, I don't want to say soft because it's just never felt soft there, but the fact that contract volume has dropped so much and yet active listings haven't dropped, it tells me that maybe there might be some softening. Now, if we keep going, contract volume, like I said, Williamson County down 12.5%. This is just not Williamson County. Williamson County's always been the strongest. But of course, what have we been seeing? We've been seeing a little bit of softer on the equity side, at least for the past 3 weeks, 3 weeks. Maybe that's making a difference. You tell me. I would love to get your perspective on what's happening. Whereas Davidson County, demand, even though it's down 3.5%, it's only down 3.5% compared to being down 12%. Williamson County never makes the bad report card when I do these. I'm just surprised. Murray up in contract, but also in active listings big time. And then Sumner and Wilson flat to slightly up in demand. So the demand is really dropping in that Rutherford, Murfreesboro area. We've been talking about how bad it is there. It's very bad. And in Williamson County, I cannot believe it. I'm going to say it again. I can't believe Williamson County isn't doing well. I'd love to get your perspective on that. You can see active listings making a new high this year for Greater Nashville. Contract volume being down, though, that's disturbing. And we did have weather. I'm giving it another week or two before I really call softness in the market, but I am teetering between this was weather and snow and this is actually economic. Now, I will say, if I had to bet, I'm betting this next week is going to be hot and strong, and we're going to boost back up and make a run towards where we were last year. That's my personal opinion. I think we'll do that. Now, I've been showing this. Where is it hot? Where is it cold relative to last year by neighborhood? I was talking to my broker, and he said it's not even local. It's not even hyper local. It's street by street local right now. And I would agree with him. I mean, look at this map. This is the demand. This is contract map by neighborhood. Blue is less than last year. Red is more than last year. And while it has been pretty consistent, we're still seeing, West Haven being a hotter neighborhood than it was last year. We're still seeing Charlotte Park be softer than it was last year. Let's take a look at, I've got a buyer in Creve Hall. He really wants to buy in Creve Hall. Creve Hall is flat to where it was last year now at this point. If you have off market, you know something, you're thinking about selling, reach out to me. I'd love to connect you with those buyers. But you can see blue, it's soft. Laverne, Smyrna, very soft in there. You get closer to Murfreesboro and the heat picks back up, but Murfreesboro is not strong right now. By the way, look, here's active listings. Red is lower, green is higher. You can see lots of green along that I-24 corridor. You see lots of green down here in Spring Hill and Thompson Station. We just talked about it being soft down there. Let's zoom in. You can see Wades Grove, have a buyer there. And by the way, where it's soft, where you see low contract volume and an increase in active listings, you also have people that hold listings. They'll wait. If they're smart, they'll wait. If you don't have to sell, you don't want to sell in a buyer's market. You'll sit there and wait. In 2022, that was quote unquote the market peak. Okay. I took the median price of 2022 and I compared it to the median price of every house in 2024. Prices are up about 2%. Now, a lot of people have said, oh, that's mixed. So what I did was I actually created a chart here. The x-axis is 22. The y-axis is 24. And I found every repeat sell that was just a site-built house that had the exact same square footage. So this isn't going to be every single repeat sell, but what this should be is every single repeat sell that was basically the same listing. And it was a house, not a condo. I really tried to pare it down to just repeat sales. Now, what's interesting about this is only about 25% of the houses actually sold for less, which, by the way, is kind of shocking to me that we had 40, I think it was 42 that actually sold for less. Anything under this red line is ones that sold for less because people are like, oh, home prices are up in Nashville. And it's like, okay, but you're not buying a Nashville index of homes. You're buying a house. And we have 25% of them that actually sold for less in the last 2 years. Some of the patterns that I see are people that bought in sellers markets and then sold in buyer's markets. You'll see at any time, look, the green is buyer's market, the red is seller's markets. You'll see, like Creve Hall. Again, I have a buyer there. They're looking in this area. They'd love to live in Creve Hall. Creve Hall is cooled off. It was a seller's market just 2 weeks ago. It was much, much hotter. There was only 15 active listings with 8 under contract. That would be less than a 2-month supply. Whereas today there's 18 with 4 under contract. Now we're at 3 to 4 month supply. Just in 4 weeks, it has cooled off tremendously in Creve Hall. If you were buying in February, in the early part of February, you might have felt stressed to buy, whereas now it feels much cooler. It felt very cool last August, but if you were buying in June, just 2 months before, May, June, it would have felt like there was a 1 month supply in Creve Hall. See, that's why I love these charts, because you see active listings, the blue line, you see contract volume, the red line. You can see there are times where there are more under contract than active listings. If you were looking in that neighborhood, you would have been overwhelmed with what's going on under contract. It would have made you think, oh, I got to panic buy. You never want to be reactive. The green bars, by the way, that shows you the motivation. It's the price cuts of active listings. And anytime the green bars are elevated, that shows you that sellers are nervous. It's also something you want to see. We've got 18 active listings. 9 have cut their price. This neighborhood's much, much softer than it was just a few weeks ago. Look at Sylvan Park. Sylvan Park's very cool right now. Sylvan Park, let me show you this, because Sylvan Park was super hot. But you go back to May of last year, there are 14 under contract and 13 active listings. You might have panic bought then. I actually talked to somebody who did in the spring of 23, where it was like a 1 month supply in there, where there were almost no price cuts. They bought, overpaid for a house, and then they tried to sell it when Sylvan Park's gotten much softer. Sylvan Park's soft now. So I bought in Sylvan Park. I actually bought and sold right here. I bought in 2018, and then I sold it in spring of 22. It was perfect timing, but let's be honest, the housing market to get back in has been awful. It's been atrocious. So it's not like it's a big W. It's not a capital W, but we certainly did time it well. And with that, I hope you all have a great weekend. And again, please leave in the comments what you think is going on with the housing market.